Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx. Diving into Australian dollar here today in the midst of a comeback, and we're going to explore why we're getting the recent strength in Aussie and where it could be headed as well, because a lot of the Aussie devotees out there probably know 67 cents, not very historically expensive, but it is better than 64 cents, and that's where the Australian dollar market is coming from. Let's dive into the price action before we get to a bunch of economic data and potential for Aussie in the future. But in the past, we've seen Australian dollar up 4% since April. That's a nice rally there, especially for a forex market. Up 4%, a nice 2-month move. That being said, coming off of those lows around 64 cents. But what's really been nice about this move is they got up above 66 and they haven't really looked back. There's been a lot of chop between 66 and 67, but at least holding this level here with the potential to move on to 70 cents and even higher, whereas in the past couple of years of trading, really, we saw so many Australian dollar rallies sold into immediately, bounce back from 62, 63 cents to 66, move all the way back down to 62 or 63 cents. This one holding on to most of the rally, and for good reason. I mean, let's start with interest rates. This really struck me. I didn't see this coming. Huge rally in Australian interest rates the last couple of weeks here. Their 10-year is actually now higher than the U.S. 10-year yield. And if you're super clued into interest rate markets, you know that Australia doesn't have a higher overnight interest rate than the U.S. The U.S. of the major economies, and in those major economies I include the U.K., Euro area, Japan, Australia, and Canada, as well as Switzerland, but they didn't hike that much throughout the last couple of years. But anyways, Australia got to those mid-4s, similar to the Euro area, whereas the UK got up above 5%, and the US led the way at 5.5%. And so to see the Australian 10-year be higher than the US is really quite powerful. Now, all of these 10-year yields that you can see across Europe and Canada, as well as the UK and Australia, have been trading around each other in the mid-3s to mid-4s. But for this Australian interest rate, really the benchmark outside of those overnight rates that the central banks directly affect, this shows you that that market sentiment has shifted into Australia having a stronger interest rate market, even though the central banks haven't necessarily hiked the Australian interest rate higher than the United States overnight interest rate. And so, like I say, more of a idea here of what interest rate markets are seeing in Australia versus the United States here. But really powerful stuff, especially, like I say, even though this Australian dollar market hasn't even gotten back to 70 cents, but has been coinciding with the rally in Australian dollar up to 67 cents. We got to walk before we can run with that Aussie. And the interest rates being higher has a lot to do with the fact that inflation has started to move in that higher direction for Australia in recent months. Now, just a little bit of background, the Australian economic data providers only look at inflation on a quarterly basis when you're looking for headline numbers, but their monthly CPI indicator that just came out last week actually showed 4% for the first time since November of last year. And you can see this trend going back to around April, right, where we're seeing the Australian dollar bounce back, of Australian inflation moving higher, as well as Australian interest rates moving higher, all of these things moving in tandem here. in the same time that the U.S., we just got CPI and PCE, both indicators for May, moving lower. And so it's not, I don't want to go crazy here with the idea that, oh, the highest inflation means the strongest currency. But at a time right now where inflation is relatively under control, the higher inflation of major economies like Australia, Euro area, UK, and the US is going to dictate some shorter to medium term interest rate action, and that's going to drive a lot of demand for currency. And so you're getting the higher inflation here, still not out of control though in Australia, and thus the idea being, well, their interest rates might be higher for longer than the US, and that might create some more demand for that Australian dollar at a higher yield than the US if they were to cut down to 4.5% or 4%, maybe lower than Australia in the next several months. Now here we widen out that view, and like I say, people who have traded the Aussie market for more than just a couple of years know that this market has been as high as 80 cents back in 2018. And then, of course, you go back to prior to 2015, and you see a lot of data points in that 80 cents to $1.10 range. That was really normal prior to 2015, was 80 to $1.10. And we haven't been anywhere close to that in recent history. You have to go back to 2021 to get flashes of 80 cents, but not even getting up there. And even with this rally, we're still more or less a rounding error off of historical lows for the Australian dollar. Right out of the pandemic, you saw a quick breakdown below 60 cents, but 60 cents has really been the low for the last decade plus. And 67 cents is a lot closer to that 60 cent low than it is to that 110 high. And so this all being said, you have to, one, qualify all the data that I just went through. It's relatively short term and it's coming off of historical lows. But two, there is a historical case for this market to mean revert a lot further than just 67 or 70 cents. Of course, it can break down below 60 cents, but it can absolutely mean revert to the upside and easily get above 70 cents and potentially get on to 80 cents. Anything possible here, especially if we see a couple of things fall in line. If we see not only the strength in inflation and interest rates, but if we see a resurgence in Australian GDP, like we saw in 2021 and 2022, where they were printing, 3, 4, 5, 6% with relative ease for about a year plus at that time, you could really see that Australian dollar build in some strength, because the trajectory for the U.S. has absolutely been lower. And also in a lot of parts of Europe, some of the major economies sprinkled throughout Europe, they've gotten down to zero or negative GDP growth. And so definitely an opportunity here if Australia can turn this GDP growth rate around. If they can get back to 2 to 3% even, they would be competing with the U.S. for GDP growth rates. And a big part of that can be this China piece. Their economies are so intertwined. And you can see here, looking at the long-term chart, which is pretty much in line timeline-wise with the Australian dollar chart that we looked at a little bit ago, looking like very similar price action, right? Close to those decade lows and just recently bouncing off of those lows. That is not a coincidence. The Chinese economy very highly correlated historically to the Australian economy. And a lot of times you'll see the Chinese stock market seeing similar price action to the Australian currency, which might seem kind of wild, but the Australian dollar currency is historically been a proxy trade of sorts for Chinese exposure. And so this is another one that if you see this Chinese economy and Chinese stock market get back to, we're looking at the FXI ETF here, which is large cap Chinese stocks, we see this market get back to the mid 30s or even $40 a share, which, from 2015 to 2022 was very normal. You could see that Australian dollar get pulled higher by that, and you would likely see Australian GDP rising in that area as well. All of that being said, of course, if you've traded this Australian dollar in the last 2 years, you've seen the sub 60 cent prints. You've seen a lot of 62, 63. So bear that in mind, absolutely risk to the downside, but we're seeing some Australian dollar growth recently and a couple of different metrics that we'll be watching to see if that growth furthers onto 70, 75, maybe even 80 cents for the first time in a couple of years. A lot of ground to cover before getting there, but things are looking up for the moment in Australia.